sharing my screen. Before I do that, I'm going to let you know that we are recording this webinar so that we can make it available to you both as a slide deck, but also as a recorded video. So if you have any concerns, feel free to keep your cameras off. And I'd also like to ask that you put any questions that you have in the Q&A box. That is a, rather than the chat. The Q&A is just a little bit easier for us to keep track of. So go ahead and share my screen. And we can get started. There will be time after the formal presentation for me to take questions. So as you have questions, feel free to put them into the Q&A and then we'll deal with them as we go. All right. My name is Erin Choquette. I'm the General Counsel for the Connecticut Paid Leave Authority, and thank you so much for spending a little bit of your evening with me tonight. Andrea Barton-Reeves is our CEO. I know she's got some, she's about triple booked today, so she will be part with us for a bit. But generally speaking, you've got me. I've been with the Leave Authority for just a couple of months, but actually I've been helping to bring the Leave Authority to fruition since the law was passed in 2019 as part of my responsibilities in my previous job at the Department of Administrative Services, where I worked for about 14 years. And before that, I worked in private practice in Connecticut, handling employer-side employment law matters. And I've been doing FMLA work for my entire professional life, including co-authoring the Family and Medical Leaves Entitlement Manual for the HR professionals in the state of who work in state agencies. I'm a proud graduate of the College of the Holy Cross as well as Columbia Law School. So that's enough about me. Let's talk about the Paid Leave Authority. The Paid Leave Authority is a quasi-public agency that was created by Public Act 19-25. It had its very first board meeting in October of 2019, and our first order of business was to hire a CEO. Andrea came on board in March, and it's been all systems go since then. Our responsibility is to provide financial relief to Connecticut families so that we can help individuals who need to take time away from work because of their own illness or to care for a family member or for a few other qualifying reasons that I'll talk about without having to worry about the lost income. So we have a twofold mission. First is to provide employees with the ability to access those paid leave benefits. And secondly, to empower employers, administrators, and medical providers in their role in this process by giving them helpful tools and education and providing them with the support they need in this process. The Paid Leave Authority has a number of statutory responsibilities, which include outreach and engagement, running the paid leave program, which involves developing procedures and policies. We are responsible for establishing the contribution rate and receiving those contributions. Now, the contribution rate is 0.5%. And the contributions start in January of 2021, so right around the corner. Starting in January of 2022, we will be administering claims for those paid leave benefits. And the focus of tonight is our fifth responsibility, which is to create a process to approve and audit private plans. Before I focus on the private plans, I think it's helpful to do a little bit of level setting. So if you've seen this before, please bear with me, but I think it's helpful to just have a little bit of the reminder. The first thing I want to focus on is the ctpaidleave.org. That's our website. It's not just informative, although it is that, but it's also our portal. That's where you register. That's where you can go to remit contributions. That's kind of the workhorse for us. And that was launched in early September. And I strongly encourage you to spend a little time checking it out. On November 23rd, the employer registration officially begins. Now, if you've spent any time on our website, you know that you could actually already register. We have a soft launch that started on November 1st. So employers can and will be able to continue registering. Everybody needs to register if they have any employees working in Connecticut. Sole proprietors and self-employed individuals who want to participate in our program are allowed to enroll themselves, and they can do that through the website as well. As I mentioned, starting in January, employers will start deducting the contributions from their employees' wages. And if you've been enrolled as a sole proprietor or self-employed individual, your contribution obligation starts then too. And then in January of 2022, employees and those sole proprietors and self-employed who have enrolled can begin to receive or submit applications to receive paid leave benefits if they need to be away from work for a qualifying event. So those are the big dates that are keeping us busy every day. Now, the paid leave program is deliberately intended to be very broad and to provide benefits to as many employees as possible. And so under the statute, all employees working in Connecticut are required to contribute 0.5% of their wages to the Connecticut Paid Leave Trust. The only exceptions to that are if you're not a covered employer, which I'll define in a minute, or unless your employer receives permission from the authority to offer a private plan instead. Now, if you are working in Connecticut and you have earned at least $2,325 in the highest earning quarter of the first 4 of the 5 most recent quarters, and you have a qualifying reason, you will be able to apply for income replacement benefits. Now, the one thing that I think is helpful is thinking about eligibility for income replacement benefits is based on the money you earn. So that's it. It's just, are you working in Connecticut? Or had you been working in the 12 weeks prior to requesting the income replacement? And did you earn the $2,325? And that could be from one or more employers. If you work for an employer with an approved private plan, those employees will apply to their employer for the income replacement instead. The private plan is intended as an alternative option to the Connecticut Paid Leave Program. So I mentioned that you have to be working for a covered employer, or you yourselves have to be a covered employer to have your employees participate in the Connecticut Paid Leave Program. Well, who's covered? As I said, it's really broad and deliberately so to include employers who have one or more people working in Connecticut. This includes nonprofits. This includes private sector employers with unions in their workforce. And as I've mentioned, it includes the sole proprietors and self-employed who choose to opt in. There's no individual employee opt-out. If you work for a Connecticut employer, you're either covered or you're not. You can't just say, I don't personally want to be in. But there are a few entities that are not considered covered employers. These are actually parallel with the entities that currently are not covered by the Connecticut FMLA. And that is the federal government, the state of Connecticut, except as to our covered public employees, municipalities and local and regional boards of education, unless they have covered public employees, and non-public elementary or secondary schools. So if you as an employer fall into one of those 5 categories, you're not part of the Connecticut Paid Leave Program. Okay. I promised I would define covered public employees. And so I will tell you that for the state of Connecticut, non-union employees, so managers and appointed officials, are considered to be part of the Connecticut Paid Leave Program. So we will be contributing our 0.5% into the trust, just like everybody else. Unionized employees in the state of Connecticut are not covered unless they collectively bargain to participate. For municipalities and boards of education, none of their employees are covered unless their unionized employees bargain to be part of the program. And if the unionized employees bargain to be part of the program, then everybody is part of the program. Okay. So I wanted to spend a little bit of time on this because I think it's important to understand that if you are a covered employer, you only have two options. You either participate in the Connecticut paid leave program or you apply to have a private plan. If you're a sole proprietor or self-employed individual, you're only covered if you choose to opt in. If you don't want to opt in, that's fine. You don't have to. You don't have to do anything. You do not pass go. You do not collect $200. You're out. You're good. You don't have to do anything at all. Okay. So what is this private plan or exemption option that I've been talking about? Sort of the alternative to the public option. This was created by statute. And basically it says, if you, the employer, can offer your employees a plan that is as good or better than the Connecticut public program, then you can apply to the Paid Leave Authority, show us that you've met the requirements, and then you will be administering your employees' claims for paid leave benefits for that income replacement that they need when they're out on leave. If you have an approved plan, then you are no longer required to remit contributions to the authority, and your employees will not receive benefits from the authority. You do have the option of withholding a portion of your employees' wages, but you can only do so if you use the money to administer your private plan, and that withholding cannot exceed the Connecticut Paid Leave Program's contribution rate. As I mentioned, right now, that contribution rate is 0.5%. That's the maximum, so it could go down in the future. And so the employer cannot withhold any more than that. And if our contribution rate goes down, then the employer's contribution rate would also go down. Now, the Connecticut Paid Leave Authority is headed by a board of directors, and our board of directors approved the private plan policy in its October board meeting. That policy is actually a very comprehensive document. It sets forth the policy, it sets forth procedures, and it also includes some template documents. You can find that policy on the I Want to Apply for an Exemption page on ctpleave.org. You have to sort of scroll down to the bottom, and you'll see in that gray the private plan policy. So that picture on the right is actually a screenshot from our website. As he said, the plan requirements must offer the same or better benefits as the public plan. That means it must offer income replacement for the same reasons as that you could get under the public plan, for the same amount of time, the same benefit rate. Generally speaking, short-term disability policies do not cover all of the reasons that the public plan will cover. And for that reason, it would be very unlikely that a standard short-term disability policy would be enough. As he mentioned, the employer may ask the employees or direct the employees to contribute a portion of their wages to support that private plan, but it cannot cost the employees more than the public plan. It must cover all of the employees working for that employer in Connecticut. You can't have a private plan for your sales force, but decide that you want your manufacturing employees to be part of the public plan, or vice versa. It has to be everybody who you have working in Connecticut. If you are a multi-state employer, you do not have to have the private plan cover your out-of-state employees. Although I should note that there are a number of states that have paid FMLA, and a number are actually looking to enact paid FMLA. So we are hearing that state companies that have multi-state employees sometimes choose to have a private plan just so that they can simplify their obligations. They just choose the one that offers the best benefits out of all the states. The Connecticut legislature felt it was very important that the employees actually decide whether they want the private plan or the public plan, because it's employee funded. Their money is what's going in to support the Connecticut Paid Leave Trust. And for that reason, the statute is very explicit and says that the private plan being offered by the employer must be approved by a majority vote of the employees. So because it's only employees working in Connecticut are covered by the statute, we've made it clear that you're only asking your employees working in Connecticut to vote on the plan. Okay, so what is this private plan? Well, you have two options. You can either purchase an insurance policy, and that has to be approved by the Connecticut Insurance Department or the CID, or you can have a self-insured plan. If you choose to have a self-insured plan, you do have to obtain a surety bond that runs to the benefit of the paid leave authority, which would basically cover your yearly estimated contributions, the contributions you would have made for your employees to the paid leave authority. Now, as I said, the paid leave authority has been running like mad to try and create this program within the statutory deadlines, but it's just not a whole lot of time. And we know, in particular with the private plans, that employers who want to have a private plan would like to be able to get their private plan approved before they have to make contributions. We also know, because we've been working with the insurance community for several months now, that they need information that simply will not be ready in time for them to develop their final policies before contributions are owed. So we borrowed a page from Massachusetts, which created its paid FMLA a year ago, or a year before us, and created what we're calling the interim period. So during this interim period, which started actually in July, when the first notice went out, and will continue until early 2021, you can apply for the exemption on the basis of a declaration of insurance, or if you're doing a self-insured plan, a declaration of self-insurance. So the declaration basically consists of a list of all the statutory requirements and the handful of additional requirements approved by the board of directors that says, this is what we need to have. We know we need to cover all of our employees. We know that this is the eligibility. We know that this is the length of time. We know we need to have an internal appeal process, for example. And you also commit to saying, we know that there is some additional information that needs to be finalized, and we will finalize our policy within 60 days of when you issue that additional notice. As I said, this is how Massachusetts handled it. It seemed to work well for them, so we're doing it as well. And so you can go ahead and apply for your exemption on the basis of those declarations. On the links here, I've shown you where you can obtain the declarations. For an insurance policy, there are about a dozen insurers who have applied to the insurance department for approved declarations, and we have a list of those insurance companies. Or you can go to that private plan policy document that I showed you, scroll down to Exhibit A, and you'll find a sample of the Declaration of Self-Insurance. So this is a growing list of the insurers that have already filed approved declarations with the insurance department. If you are an insurer and don't see yourself on that list, it may be because it's still being reviewed by CID. If you're an employer and you don't see your insurance company on this list, call them up, ask if they're interested, or talk to your broker. There are a number of insurers who have notified us that they're interested in participating in this market.
Erin, can I interrupt you for just one moment?
Of course.
So there was a question posed about, just because we're sort of in this particular space, about a person who's worked for an employer and that employer has a private plan, they leave, and how does that person access benefits? So that was one of the questions that was posed. So I asked them to wait because you answered this question so well that I said, it's probably better if she just answers it and then everyone can hear the answer, because I do answer, but not as clearly as you do.
Gosh, you're giving me a lot of pressure here, Andrea.
Sorry.
But let me tell you that one of the requirements for the private plan is that you cover your employees, but you also cover your former employees for up to 12 weeks after they leave your employment. So that provides protection to an employee in the scenario identified where they've been in a private plan, now they've gone, and maybe they don't have a new job yet. So they've got that 12 weeks of protection under that private plan. Alternatively, you leave your employer and you go to a new employer who is participating in the public plan. Well, in the public plan option, um, you could apply for benefits through the public plan if you are working for an employer whose employees are in the public plan. The eligibility for benefits is that 2325, and that's true whether or not you contributed anything to the public plan yet. You may be a person who gets the benefits and then spends the next several years of your working life paying it back. Some of us will be paying into the public plan before we ever have need to use it. So hopefully that answers the question in terms of how you achieve your benefits. Okay, so this interim plan that this interim period that we're talking about, as I said, that will end. We will be finalizing the guidance notice, we're already working with insurers to get them the information they need. So we'll issue that notice. Everyone will have 60 days to finalize their documents. And once that happens, we'll get rid of this whole declaration idea and everyone will just file their policies. So I will give a brief overview of the application process, and then I have some screenshots to show you what the application process will look like when it's live, which will probably be in a few weeks. First, right now, registration is open, so you want to go ahead and register as an employer on ctpleave.org. In that registration process, there's a question that asks, do you intend to apply for the private plan exemption? So if you do, check it out. You can change your mind. But this helps us know kind of generally what we're talking about. It allows us to reach back out to you once the application process is live and helps us know kind of what we're dealing with in terms of the contributions. So once the application process is fully functional, you'll go back into, say, ctpleave.org. You will be able to access the account that you created when you registered, and you'll complete the application, submitting your declaration. And then after the interim period is over, you'll go back in and upload that final plan document. At that point in time, we're just going to look and make sure that that final plan document doesn't materially differ from the declaration and what we're calling the plain language guide, which I'll explain in a moment. So, sorry, I'm going to go back for 1 second. So between now and soon, right, between when you register and when you go back to actually apply, there's some work to do. First, you have to decide what your plan is going to look like. So you either work with the insurers who've filed a declaration, or if you want a self-insured plan, develop that based on that self-insurance declaration document. If you're going, so if you want to do that, again, you want to look at that policy documents on our website. Then you need to educate your employees about the plan. One of the things that we've done to help you educate your employees is to create a plain language guide template that's also found in the private plan policy document. The plain language guide can be modified to meet the specific circumstances that you're going to be offering, but it needs to be complete and accurate, and it needs to explain to your employees what you're offering and why you think it's better, frankly. So you're going to give that to your employees together with the declaration. Then you need to hold an anonymous vote on that proposed plan. And the majority of all of your Connecticut employees, that means employees working in Connecticut, regardless of where they live, they have to vote in favor of the plan. We get questions a lot about, well, how do we do an anonymous vote? If you're a small employer, maybe you can do it with paper ballots. If you're larger, or if your people aren't working in the office, there are a number of web-based application process apps like SurveyMonkey and things like that that you could run. If you're teeny tiny, and it's like, well, there's only 2 of us and we know our handwriting, that's okay. The purpose behind the anonymity is to make sure that your employees feel that they are free and can make their own decisions without worrying about whether it's what their employer wants or doesn't want. So if you are so small that anonymity is difficult, you can just do a better job of making sure that your employees know that they should vote what they want and not to worry about you, frankly. And then, as I mentioned, if you're a self-insured plan, you'll obtain that surety bond equal to the estimated value of a year's worth of contributions of your employees. Plain language guide, as I said, you can find that template at Exhibit B to our private plan policy. It can be modified, but you want to make sure that it's accurate and complete and that there's no hint or hinge of coercion, because the purpose of this is to explain to your employees what your private plan offers and to help them understand what they're voting on. You give it to your employees at least 2 weeks before the vote, and then you'll also upload it with your application. Now, that policy and procedures document lists all of the requirements for the votes. This is most of them, but there are a few extras. Most importantly, you need to provide that plain language guide and the declaration to all of your employees in Connecticut using the same method that you use to demonstrate any of your other legally required work-related postings. So, your open enrollment information or the mandated sexual harassment prevention policy. You need to make sure that everybody gets it. Even if you've got employees out on leave, they still are employees and they still need to be able to see the information and have the opportunity to vote. As I said, that vote must be anonymous and the results must be capable of independent after-the-fact verification. So telling everyone to close their eyes and raise their hands won't work. The reason we need it to be capable of verification is because the authority does have the responsibility to audit the private plans, and we may need to ask you to demonstrate to us how the vote worked and what the results were. We want everyone to have the same question to make it very plain and straightforward. So we've given you the question. This cannot be changed. Do you approve the company's private plan to provide benefits required by the Connecticut Paid FMLA Insurance Act? Yes or no? So straightforward. Question we get a lot is, what is a majority vote? And it really means what we say it means, or what it looks like. It's a majority of the total number of employees working in Connecticut for your employer, for you, who voted for the plan. It does not mean a majority of the people who voted. So you've registered, you've identified your plan, you figured out which declaration or self-insurance declaration, you've developed that plain language guide using the template we've provided, you've held your vote. Now what? Well, you go back to ctpleave.org, you go to your account page and you say, apply for the exemption. You'll upload your plan document and that plain language guide. If it's a self-insured plan, you'll also have to upload that surety bond. We're going to ask you a couple of questions about the vote and ask you to attest that you complied. And you're going to attest that you will also comply with the private plan requirements. And if you have an insurer or a third-party administrator, that you're going to direct them to do the same. Now, the requirements include not just the requirements related to the plan itself, but also to the reporting and claims administration requirements. The statute requires the Connecticut Paid Leave Authority to issue yearly reports to the legislature about paid leave usage. And so we will also need information from private plan employers about their paid leave usage so we can comply with our obligations. So I'm not going to read through this. These are truly screenshots from the exemption application process that, as I said, will be going live in a couple of weeks, getting close. In this example, I've got a person who's choosing to go with an insurance option as opposed to self-insured. But as I said, you go into your account, you click on the button for apply for an exemption. You tell us if it's going to be insured or self-insured. You'll identify your carrier. There's a drop-down list that includes everyone that we know of so far. And there's a place for other if someone sneaks in before we update the website. If you have your policy information, we'll ask you for it, but we know with a declaration you may not have all of that information yet. Then we'll ask you to upload that plain language guide, which you'll upload from your own website or computer, as well as your declaration. And then sort of a reminder that when you get your final policy, you'll upload that to us as well. As I said, you're going to give us some information about the vote, certifying that, yes, you complied with all of the procedures. You asked the right question, you gave the plain language guide, the vote was anonymous. You complied with any statutory requirements relating to accessibility, either under the ADA or other statutes that you as an employer may be subject to. And you actually tell us, okay, what was the vote? How did we, was it paper ballots? Was it an online app? And then just to make sure we can triple verify everything, how many employees do you have in Connecticut? How many voted in favor? How many voted against? How many did not vote? That calculate button will pop up and tell us, you know what, we have 100 employees and 66 voted in favor, 35 voted against, and the remainder didn't vote at all. The calculation will say, yep, majority of your employees voted. Then you'll sign in the exemption acknowledgement saying that, yes, I'm going to comply with the directives. I'm going to make sure I issue the reports. I'm going to, and I understand that these issues that are very small here, and I'll talk about it in a moment, may provide grounds for terminating or revoking the approval. You click the button saying you attest to it and you finish. The self-insurance application process looks very similar, except it also has that surety bond piece. So quick and easy. We anticipate that you can start submitting your applications for a private plan in December, but you don't have to have everything done in the next few weeks. We'll be accepting applications on a rolling basis. Applications must be approved no later than 30 days before the end of the quarter in which the plan is intended to go into effect. Okay, so we're trying to maximize the amount of time that employers have to pull everything together, get the votes done, and get their documentation submitted to us. And so specifically for this first tranche of contributions, in order to be excused from the obligation to remit those contributions for Q1 of 2021, your private plan must be approved by March 1st of 2021. As I said, during this interim period, you're going to apply based on your declaration. And so we will issue a provisional approval if you meet all the requirements. That means that you're exempted from that obligation to remit contributions. You also are required to upload your final plan document within 60 days of us issuing that final filing guidance notice. If you fail to do so, we're going to revoke that provisional approval. And that means that you would have to pay us the contributions. Now, if you've not been taking the deduction from your employees, it's going to be on you as the employer to pay the contributions on behalf of your employees. You cannot take retroactive contributions from your employees. And just as a reminder, you need to keep that plan in effect. So if for any reason you don't have that in effect, you're going to be responsible for those contributions. We will be approving plans for 3 years, and that's 3 years from the date we notify you that it's been approved. If you change your private plan before the 3 years are up, you do need to go back through the application process because a change in the private plan will result in a termination of approval. Again, that goes back to the importance of the employees voting in favor of the plans. And so you can't make a change without them voting again. And we'll need to know that you're making that change. If you have a self-insured plan, we're only asking for surety bonds to cover the year. So you're going to need to demonstrate each year that you are that you're covered, so that your employees know that they will be able to access the benefits that they're entitled to. Now, seeing that you are all interested enough to spend your evenings learning about this plan, I'm not concerned about you all, but there may be situations in the future that people may, that employers may need to have their approval for their private plan revoked. And these are the situations where that could happen if we determine that an employer has threatened or coerced the employees, or has failed to pay benefits at all, or has failed to pay them in a timely manner or in a manner consistent with the public plan requirements. If you're self-insured and you fail to maintain that surety bond, that would be grounds for revocation. Misuse of private plans would absolutely be grounds for revocation. Again, this is your employees' money, and it needs to be used for the purposes of providing them paid leave benefits. Failing to submit required reports or providing false information to the leave authority or to the Connecticut Insurance Department are grounds. And of course, failing to comply with the Connecticut paid leave statute is grounds. The private plan must offer the same or better benefits than the public plan. And so the private plan is subject to the same Paid Leave Act requirements as the paid leave authority. And of course, any employer that directs its insurer or third-party administrator to engage in such actions would have its approval revoked as well. So what else do you need to know that you can't quite get in a webinar on a Tuesday night? Well, we've got a great deal of information on the Connecticut Paid Leave portal. So on www.ctpaidleave.org, there's frequently asked questions, there's videos, particularly if you have interest in understanding more about the program itself. There's some great resources there. But if you can't find what you're looking for in the FAQs or the videos or any of the other information, contact us. We have a contact center where you can email your question, and we've got a team of people who are responding to those questions. If you request a phone call back, we can make the phone call back. So there's a lot of ways to get answers to your questions, including right now. So I'm going to stop sharing my screen, and we can go into some of the questions that have been coming through. Andrea has been great in answering a lot of questions as we go. So Andrea, do you want to let me know if there are any
I do. I'm actually in the middle of answering one right now, so I'll pose that one first. And this one says, exactly which state and federal statutes does the employer have to comply with regarding disability and language accessibility? Erin mentioned the ADA, but what state law and what about language accessibility? So I was starting to answer that some of the laws that you should be considering with respect to disability would be the Pregnancy Disability Act, and you should also, though it's not necessarily directly related to disability, this is the Connecticut Fair Employment Practices Act. But since you're in the middle of answering that, I'm going to leave the rest of the answer to you right now.
Sure. So the short-ish answer, because it's hard to answer briefly with some of these questions, is that if you as an employer are already subject to laws about making sure that you provide your materials to individuals who don't speak English as their primary language, then those laws apply to you in connection with this information as well. So there are a lot of social services or human services related organizations that already have those requirements that they need to make sure that they provide, information in Spanish or other languages. So if you're already subject to that, then you're subject to it for here as well. In connection with the ADA and with the Connecticut Fair Employment Practices Act, you do have to make sure that individuals with disabilities have fair access to the benefits of employment, and that includes information about things that are happening at the workplace. And so that's one that almost all employers would be subject to. And that means making sure that if you have individuals who are vision impaired, that there are ways of providing the information to them, either with different equipment or through Braille. We have tried to assist employers as much as possible by making all of our information available on the website and working with the department. I want to call it Rehabilitation Services, but it's changed. It's Aging and Disability Services, so that our website is accessible and meets all of those accessibility requirements. So you can use that. We also have all of our information available in Spanish right now. We hired translation services to translate everything into Spanish, so that's already available to you. So those are probably the biggies that I can think of.
Okay, thank you, Erin. Then the next question is about the private plan and collecting contributions and submitting contributions. So when we get this question quite frequently, so the question is whether or not the employer should collect the contributions while they're trying to determine whether or not they will go to the public plan or whether their employees will vote for a private plan. I can tell you the way that I answered it was, you're really better off collecting the contributions because you are prohibited from going back to your employees should they decide to go with the public plan and collect from them retrospectively or retroactively. You as the employer will be responsible for making those contributions. You can't go back to your employees and get that money. I don't know if there was anything else that you wanted to add to that.
No, I agree with you. That is the most prudent way of doing it. So that is something that we would recommend, although we do not have the authority to require it.
Okay. Then, okay. Let me see.
We just got it, Andre. I just saw a question in the chat.
Okay.
And so the question is, if we remit payments now and then decide to apply for private plans in a later date, do we receive any funds back? And are there any restrictions about switching back and forth? So I'm going to answer in reverse order. You can opt in or out at any time. So you could decide to give the public plan a go, see how we do, and then say later on, okay, we want to do a private plan. Or you could say, we're going to do the private plan now, and then later on say that you're hearing wonderful things about the paid leave authority and realize that we're great and you don't need to worry about it anymore. But you don't get any money back, right? So what we would say is if you decide that you want to do a private plan first and then later come into the public option, we'll work with you to decide the date that you're coming in. Because obviously the insurance company's not likely to give you money back either. If you start with the public plan and then go into the private plan, that's fine too. Your employees, as I mentioned earlier, are going to be eligible for benefits sort of regardless of where they're contributing. It's the eligibility is based on their earnings and not on their contributions.
Another question was, if an employer wants to get a private plan in order to pay the premium themselves or itself, does a vote need to be taken? And can an employer pay the premiums on a private plan?
So the employer can pay the premiums on a private plan. The statute says the employer may collect withholdings, but is not required to. But regardless of whether the employer is funding the private plan entirely on its own or getting deductions from its employees, the employees must vote in favor of the private plan. And if that who's paying for it is a material piece of information that would need to be included in that plain language guide. And so if you're an employer who thinks, all right, I'm going to pay for it myself, and then later realizes that this is expensive, I'm going to get my employees to contribute, that's a material change that would require you to reapply. So you want to be thinking through those options as you decide which way you're going to go.
So those are all the questions that I had, Erin. I think we either answered them live by my interrupting you, thank you very much, or answering them as they went through. I'm just beginning to check. Yes, I think that was everything.
Okay. So I'm just going to glance through. It does look like a lot of the questions. If you have any questions in the future, as I said, you can go to the contact us, which I think I saw in the chat. Andre, did you put it in the chat for me?
It's in the chat, Erin.
So Amber did.
I think Amber did. Amber did.
Thank you, Amber. So support@ctpleave.org is a great way to submit any questions that either weren't answered by this presentation or you can't find the answers to on the website itself. Okay. So a new question. If we opt for the public plan, could the employer pay the employees full benefits and then receive payments from the state? Great question. I'm so glad you asked that, because the answer is no. The statute says that the employee shall make the contributions. So if the employer decided that it wanted to be nice to its employees and say, oh, well, I'll cover it for you, what you're actually doing is giving your employees a taxable benefit. And so you'd be increasing their tax obligation, right? So you would have to include the cost of that contribution in their wages, and then that increases the contribution requirement, increases their tax requirement, increases the employee's own payroll tax requirement.
Okay. Let's see if there's another. I think we answered this one already. There was one about getting funds back. I think we answered that one.
No, but there's a new one that says
There's
that
a new
this is
one?
great, because I think
Oh, this is a good
really
one. Yeah.
important to make sure we clear this up. If an employee has two employers, one with a private plan and the other with a public plan, can that employee submit a claim to both sides? And so, yes, it will be slightly complicated, but what would happen is, with the private plan, the benefits that the private plan gives to the employee are based on the employee's wages with that employer. The benefits that an individual gets through the Connecticut Paid Leave Authority are based on their total wages with an offset from the benefits they get either through accruals or short-term disability or private plan from the employer. So if you have an employee who works for you and newspaper company, and they have to go out on leave and can't work for either job, then they could apply to you for income replacement to cover the income they can't earn from you. And they would apply to the authority for the remaining lost income. But we need to work with you, the other employer, and the employee to do that offset.
Great.
So I think that's it. I'll give everybody another minute just to see if they have any questions. Oh, we do in the chat. If we opt for a private plan and decide to do the withholdings, can the funds be used for other benefits or strictly for the paid leave? And they can be used only for the paid leave benefit. It cannot be used for any other benefits at all. So it could be used to pay the cost of that insurance plan or to cover the benefits if you're self-insured, but that's it, nothing else.
Okay. I don't see any, oh, wait, hang on. What is the advantage to an employee? What is the advantage to an employee if their employer offers a private plan? Okay. So I don't know, if you mind if I answer this one?
No, please.
All right. So some employers have told us that, excuse me, there's a few advantages, one of which is that they prefer to have the opportunity to engage in benefits coordination all within their organization. So that they prefer that their employees not go to a state plan for certain benefits, paid leave benefits, and then have the rest of their benefits coordinated by their employer. So that's one option. That's one reason that employers have articulated to us for a private plan. The other is that they, especially if they have any organized labor or bargaining units within their organizations, they prefer to manage all of that themselves in-house. The third is that some employers have said to us, and we totally accept this, that some employees have not had great experiences in their interactions with state agencies. We're a quasi-governmental agency, and that sometimes there's long wait periods, there's difficulty in making decisions, and that they don't want their employees to have that experience at all. I mean, we're brand new, and that's not our intent that be the experience. As a matter of fact, I think by holding these webinars, we're trying to set the expectation that we want to be open and responsive and move as quickly as we can. But we understand that perception exists. And so that's why some employers have said, we'd rather just do it ourselves. Other employers have said, we don't want to do this ourselves. It can be expensive and burdensome, and it doesn't give us the flexibility that we need. And as long as we have enough communication and transparency with the Paid Leave Authority, we're willing to just have our employees not even hold the vote and go to the public plan. So that's how some employers have articulated their reasons for going with a private plan. Also, I think finally, I'm sorry, some have said that they would prefer to have a third-party administrator just manage all of their leave absence management, including paid leave. So they just want the whole thing with one organization.
Right, and they're all great reasons. So, we certainly we want to make sure that employees have access to the benefits that the statute allows for, whether it's through us or a private plan. And we're just here to kind of offer the information and make it possible. We did get one great question in. Can an employee with more than one employer elect to take paid leave from only one employer at a time? For example, you need to take time off your evening job to care for the parent, but you could continue working your day job. Or you have a really strenuous job that you can't work, but you have a secondary job that is sedentary and you could. And the answer is yes, of course. So job protected leave can be taken from one employer and not the other. And you can say, I also need income replacement because I'm no longer working for both my employers. So now my income is reduced. And so I need income to replace the work that I'm not doing. This is all kind of really gets into the world of the claims administration. And so we need medical documentation to substantiate that you're out, and we'd be working with your employer to verify that you're out. And the benefits would only reflect the income you're not earning. But we recognize that lots of employees do have to work multiple jobs, and there's all sorts of permutations there. Right. As we wrap up, please feel free to ask any more questions if you're thinking of them, but I wanted to let you know that we do have other webinars that are available through CT Paid Leave, including a webinar on how to register your business. We have a webinar on the basics of the Connecticut Paid Leave Act, and we have a webinar that's a little bit more detailed in terms of the legal and practical aspects of administering leave. Those webinars are posted on CT Paid Leave in our brand new, just effective calendar function. So you can look up and see where they are. You can also go to our Facebook page or our LinkedIn page and get information about upcoming webinars. Oh, can an employee
one more
choose?
question, yeah.
Yeah, can an employee choose not to take Connecticut Paid Leave for a covered reason and save the benefits for a later reason? So you want to save, you don't want to take your time off right now because you want to bond with an expected child. So this is a great question. It's something we'll answer a lot more in the sort of practical and legal aspects of leave, because it's two parts. One is on the job protected side, which we really haven't talked about at all today. But that's under the Connecticut FMLA statute, which is a different statute. And under that statute and under the federal FMLA, if you need time away from work for a qualifying reason, then the employer has every right and responsibility, actually, the legal obligation to designate that leave as FMLA. Even if you say, oh, don't do it, the employer has to designate leave for a qualifying reason as FMLA. On the other hand, if you're talking about the income replacement, that's totally up to you. You do not have to come to the Paid Leave Authority if you have other resources for income replacement during your leave. Or in this situation, all right, well, I've got plenty of sick leave to cover the first part, and I know that I want to take bonding. I want to save the paid leave or the income replacement, then that's up to you. You're allowed to do that. All right, well, we are just coming upon 6:57. So I'll just redirect you to the chat. You'll see that there's information about the next webinar, which is the practical and legal aspects, which is going to be on Thursday. Or as I said, you can go to ctpleave.org. I will tell you, I think a lot of the people on this call may be employers. There is an employer toolkit. We do recommend that whether you're interested in a private plan or not, letting your employees know what's going on is really helpful, and will cut down on the phone calls in January when the deductions start. And so there's information that we've put together for employers to use to share with their employees. There's a poster, there's a payroll insert, there's downloadable fact sheets. So we really encourage you to look at the employer toolkit, to look at the website, to share the information with your employees, and just make sure everyone knows what's going on. And if you want to apply for a private plan exemption, as I said, there's information on the website about how to do that, and then look in December for the actual functionality for the application. We really appreciate your attention and your great questions. They're really helpful. We actually turn a lot of these questions into FAQs, so you may see that in a future issue of the website. So thank you very much. I will stop recording and say good night.
Good night.